Hi, this is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today is a couple of things. One, I want to call your attention to a change we've made in our portfolios. We've substituted out consolidated water for Connecticut water service. It's kind of a minor move. Consolidated water we stuck with for a long time. It's a reverse osmosis company. Still like the idea, still like that type of investment. I think there's a tremendous demand for it around the world. And this company has been able in the past to basically go out and build stuff and immediately accumulate cash flow from that and pass that along to us in higher distributions. It's helped the stock price. But they've kind of run into something of a roadblock, I think, due to the recession in large part, and that is regulation. And of course, any essential service company is very dependent on those who oversee the services, regulate those services, to grant them an adequate return on investment. They have had some problems in some of the areas, but what's really gotten my attention is a problem in the Caymans where they have 40% of their business. And a major contract has come up and is under negotiation, but it looks like they're going to have to take less of a good deal on that one. And that's, again, a bad precedent. I think it indicates some trouble. So even though that stock has come off to some extent, I don't think the dividend's at any risk. I think there are better opportunities out there. And I think Connecticut Water is one of the very good ones. You can read about it as a spotlight stock in the issue of Utility Forecaster. And it's a very solid growth story, very steady growth story, also a takeover target, and that is being the topic of the month in Utility Forecaster. So, we're doing a little tweaking there. One thing we're not doing is making wholesale changes or running for the hills. I think the preponderance of proof here is on the bullish side. I know that makes me quite a minority, a very tiny one. In fact, there was an article that appeared on Yahoo Finance that probably many of you read that said, face it, no one is bullish. That's the kind of thing, though, that makes me more excited about the fact that there are low expectations out there and plenty of opportunity to beat those expectations. And as you know, in Utility Forecaster, we're not really buying the S&P anyway. We're buying companies, good businesses that pay us good dividends, that are growing those dividends. And that's really where our bread and butter is. And those are not necessarily going to move along with the S&P. As we saw over the past couple of years in this market, on bad days, everything gets sold off except treasuries. On good days, everything benefits. Besides treasuries, people dump the treasuries on the days when the economic news looks good. We had a nice run in July into August, and the last several weeks we've had again pessimism. The pessimists seem to have won out, and like as I mentioned, the article, face it, no one's bullish. That's a pretty strong sign that of a lot of fear out there. But again, I think that we have these opportunities there. And if this sentiment indicator is even half right, a lot of upside. So take a look at the portfolio. Again, these are conservative companies. We buy the businesses. We don't buy them from 30,000 feet either. We buy them right on the ground. We see what how they're earning, how they're able to pay the distributions, and grow those distributions. And therefore, I think we have a very strong group of companies, and I think now's an excellent time to add them. Again, observe the buy targets. Some of our picks are above the buy targets. Don't buy them above those levels. As we've seen, this market can turn on a dime, and you can get those good prices if you're a little bit patient. That's all I have to say today. Again, thanks for tuning in. I look forward to chatting with you next time.